Hi everyone, today is the 20th of February 2023 and I'm going to be going over my weekly prediction for SPX for the week ending 24th of February 2023. So as usual, we look at the monthly charts and the weekly charts and the daily charts along with the option chain to come at a conclusion as to where I think SPX is going to be heading. But before starting the video, I would like to make an important disclaimer that all the information in this video is for educational purposes only, and any trades that you want to take based on the information of this video, it is highly advised to consult a financial advisor before taking them, because all trades are subject to market risk and you can result in heavy losses if taking trades without prior information. So let's get into it. As you can see here from the monthly chart, there has not been a clear candlestick pattern other than the fact that there is a clear doji pattern being formed as of February, although the month hasn't fully closed, so we still can be short. But taking prematurely the candle as a doji candle, we can derive that the current high or close to be immediately the next resistance really is the open of this big red candle, which is at 4087.14. As you can see, the spot price is at 4079.09. So if the spot price closes over this resistance point, then it's a pretty good bullish signal, as it shows that it's breaking the resistance for 2 months. So that is a very, very good bullish signal. And we can't derive much else from the monthly candles because, as you can see here, the RSI has pretty much flatlined. It's been going in a M pattern and then it has flatlined. So it shows an indecision in the monthly candle, which is represented through the doji candle as well. So we can't derive much from the monthly candle. But if you move ahead to the weekly candle, things start to get a little bit more interesting, because as you can see, the market has gone in a clear uptrend for a while, rebounded off of this resistance, and formed two spinning top candles. So what we do here is, as you can see, there is a clear M pattern being formed here. Although you can't see here, when I get to the daily charts, this will be significantly more visible. And what it simply means is that this point here, the low of the middle candle, or the low of the M, the trough, is where the immediate support is. And because the weekly candle has two doji, we can derive a clear support and a clear resistance as well. The immediate high and the immediate low of the previous candle. And that has to be closed above or below. So if we take the immediate high and low, we get a resistance of 4176 and a support of 4060. Now that is a significantly large range, and when we get to the daily charts, this will be much more compact, and I'll give you guys a clear trading range to wait for, and only if the market breaks, that is when a trade should be entered. It should also be noted that the RSI is currently going slightly downwards, and it has been going consistently downwards for the past few weeks, so we can take it to the fact that the RSI is lightly confirming this two red candles. However, until there is a clear directional view in the candlesticks, it is difficult to make a prediction based on just the weekly charts. But here is where things get the most interesting, the daily chart. As I mentioned earlier, the M pattern is considerably more visible in this candle, because as you can see, I have sketched it out and I'm tracing it out with my cursor now. And what this simply means is that the trough of the middle incline of the M is where, if the market breaks below it, then there is expected to be a sharp decline. However, that also acts as a support point, because if the market takes it and rebounds upwards, then it could actually form a convergence pattern called the W pattern, which is something I'll cover in another video if the market forms that pattern. But even more interestingly, the doji candle has been formed with its body at the very top, which in itself is indecision with slightly bullish favor. But if we take into consideration the RSI here, which is steadily declining, we can take it as a sort of minor divergence, or the start of a divergence, since the market has been heading down and now we have this candle here, which means that the RSI is not confirming the potential uptrend, which means it is very important to wait for a range to be broken, as at the moment there is not a clear confirmation between the indicator and the RSI oscillator. So what do we do? What is the trading range that can be derived from this candle? So immediately we can see that the trading range, just based on support and resistances, is 4049 and 4094. However, if the market closes below the trough of the M, you can take a trade prematurely in expectation that the market goes downwards. However, this is correct technically. It should also be noted that the market events this week are very significant, including the FOMC meeting minutes and the GDP data compared to last quarter. because of this, the technical analysis is very, very strong, and even though the data is being released, it is still more likely that the market continues in this direction, just to be aware of the fact that if the market does rebound in the opposite direction, it won't be a very strong rebound or a very long rebound, because it's just purely off of data that's coming for the week. So that is just something to keep in mind. And now that we've covered the technical analysis, as usual, we'll head towards the option chain. So as you can see here, the monthly expiry date has a highest CE of 4100 and a highest PE of 4100 as well, with no change in the CE value from the last week's video and a plus 50 change in the PE, which in itself is a bullish signal. And the premium for 4100 CE is 71, and the premium for 4100 PE is 84.60, with the PCR being at 1.52. Next, for the weekly expiry, the highest CE is 4125 and the highest PE is 4050, with a plus 25 change in the CE and a minus 50 change in the PE, which is a strong bearish signal. And if we link it back to the candlestick chart here, the M pattern of price action is a very, very bearish pattern, because when the trough is broken, it almost always leads to a bearish fall downwards in price. So this is a good indicator and confirmation from the option chain that the weekly expiry is looking to be bearish, because the consistency of the CE and PE changing both together shows a bearish intent in the market for the week. And the premium for 4125 CE is 15.34, and premium for 4050 PE is 23.32, with a put to call ratio of 2.93. Finally, we go over the daily expiry date, which has a highest CE of 4100 and a highest PE of 4075, with a minus 25 change in both the CE and PE. This gives an ambiguous signal, as it gives both a bullish and bearish signal. Since there is no value that is larger in the CE and PE, this can be completely negated as a signal altogether. So it shows indecision in the market, which I mentioned as RSI flatlining and sometimes not confirming the price trend, which makes it even more important to the prediction that I'm going to give at the end of this video. The 4100 CE has a premium of 9.20, and the 4075 PE has a premium of 16.65, and the put to call ratio is 3.29. So now that we've reviewed the technicals, we've reviewed the option chain, and try to confirm it with oscillators, it's fair to say that the best trade to take for the week is really just to wait for the trading range to break. And the trading range that I'm talking about is 4094, 4049. And if you want to take a trade aggressively, you can also keep the resistance at 4066, which is the trough of the M pattern. So if it does close below it, you can definitely take a trade there as well. So until and unless this range is broken, which by the way is highly likely since the market is oscillating quite rapidly these days, so it would make sense that the trade is broken fairly quickly. So until then, it's best to wait for the no trade zone to be broken and then take a position wherever. And same for my prediction here, whichever direction that the market breaks in is where my prediction automatically alters. So on this note, I would like to conclude the video, and I'll see you in the next video where I give my in-depth analysis and review of SPX for the next week.